Hoffman Chien of FlowCap Advisory. So, Edmund, thank you so much for being on the show.
Thanks for having me. It's a pleasure to be here.
Awesome. So, you have a very interesting background. So, please tell us about that and kind of your journey of growing in the commercial real estate industry.
Yeah, sure. So, I've been a real estate investor. Man, it's almost, I guess it's 22 years now. So it's been a little while. And in that time, I was a senior partner of a private equity firm. And we had created a lot of proprietary real estate investments, essentially our own syndications, primarily in the Dallas-Fort Worth area. And I'd done that for over a decade. So I became a senior partner there at that firm. And I guess my journey really started like a lot of people. I read Rich Dad, Poor Dad way back in the 90s when it first came out, and kind of caught the bug and started to realize, I think cash flow and real estate investment might be an interesting way to build wealth. And it just kind of ballooned from there.
Nice. So started through that private equity firm. And so your main role there was raising capital, correct?
Yes, that's correct. So how I started out, I was about to buy my first deal and really kind of nervous about it. I wasn't too sure if I was going to make some mistakes, and it all seemed kind of daunting. And at the time, I discovered this private equity firm that had been investing in real estate at that time for about a decade. So I figured, you know what, it'd be great if I could just work for them and sort of learn how to do it. And I wasn't an accredited investor, so I couldn't become an LP investor with them. I talked to the president, and he talked to me, and he said, well, if you can raise capital and if you can start on the phones, and I would start at the bottom. So I was like, you be a cold caller and you can raise capital. If you're successful at it, then I'll start teaching you, because we have to kind of teach you how to explain what we do. And in that way you can learn. So I figured, I don't have the finances or the money to pay this guy to be my advisor. But if I work for him, he has to teach me the exact same thing. So that's how I got started.
Awesome. So spent a lot of time, and basically you, I've heard you speak before, and it sounds like you've pretty much kind of perfected the whole process of raising capital. So I just really want to focus today's conversation around that. Tell us about your journey of how much, were you able to raise during your career?
Yeah. So as a senior partner, I was indirectly responsible for $500 million of assets under admin. So that was kind of the largest, or the height of the firm. And of that, my book of business was 70 million. So I raised that capital either directly or through my team or with my team. So as I started to get to my later years, they had started to build a team around me. So I had an associate, and then I had people that were cold calling, and we just developed those leads. So the team started to expand, but essentially it was me that closed those funds.
Got it. Right. And in previous episodes, we've talked about, the difference between a 506B versus a 506C. And so we won't get into that. People can listen to the episode with Bethany LaFlamme if they want to learn what that is. But, you can kind of maybe give high level if you like. But can you kind of speak into capital raising for, those two different types of deals? Do you prefer like a certain type versus the other?
Yeah, that's a great question. And for me, I'm a little bit biased because I started out in 506C kind of world, starting with accredited investors. And I remember, towards the middle of my career, one of my mentors said to me Ed, don't ever manage friends and family money. And I was kind of shocked or surprised. Like, why wouldn't I manage friends and family money? And he said, well, if you get it right and the deal does incredibly well, your family's not going to love you any more than they already do. Right. And it can only get worse. It can only go bad. And, Thanksgiving dinner becomes incredibly awkward. Right. So don't raise money from friends and family. And I had also realized that if you start dealing with non-accredited investors, and I discovered like some of our smaller clients were the biggest headache. Like they would always call us and be nervous. And I started to explain to somebody, if you take a $50,000 check from your $100,000 cousin for a real estate deal, the fiduciary responsibility is quite high because you represent 50% of their portfolio. But if you take a $50,000 check from a $10 million client, you're a drop in the bucket. Like, they might not even care who you are. Right? So fiduciary responsibility is a lot lower. And the way to sort of look at that is if you were to take an analogy of drilling for oil, Would you rather go and spend all the effort to go and prospect for oil and drill for oil, really to get 2 barrels out of the ground? Or would you rather go and find an oil well that has 100,000 barrels in the ground, right? It's the same amount of effort to drill. So in terms of time and effort for investor relations, it's less with accredited investors. It's just that your skill set needs to be a bit higher. So time isn't as demanding, but skill it needs to be increased, especially to get into a higher weight class.
Exactly. So since your skill level needs to be at a higher level, would you say it's good to start with friends and family for people that are new to investor relations and capital raising, and then kind of advance to those, higher net worth people later on? Or how do you recommend people go about that?
For me personally, I typically recommend to people because I don't think that friends and family 506B is a prerequisite to go into a 506C, because the skill sets are different, and you will start to realize that the time is much higher on a 506B. I kind of recommend people that if you're starting out, start with 506C newly accredited. So people that don't even know they're accredited. So somebody who's just completed 2 years of 200,000 or just got over the threshold of 100,000 or $1 million worth of investable assets. And that's a great starting place to sort of cut your teeth on. Now, having said that, I can understand why some people might be nervous about going to accredited investors, might want to try with friends and family. The other thing that I don't really like about friends and family, aside from the social aspect of it, is also that there's higher scrutiny from the SEC. So you have to really be able to document a pre-existing relationship.
Got it. So starting with newly accredited investors, that seems to be a good way to start. One thing that I want to touch on as well, or maybe you can, go into more detail, but a lot of people, when they get into this business, they specialize usually in a certain area. So asset management, maybe underwriting, or capital raising. So when it comes to that, do you feel like, everyone on your team should be raising capital, together all the time, or should someone be more specialized in just investor relations alone?
I think when a team is brand new, it might be a wise idea for everybody sort of to try out all the different roles just to get an idea and a feel for what it's like. But it depends on how big you get. And it really depends on who you're up against. So if you start to take a look at what weight class you're in, once you start going like semi-pro, I call it. So once you're in the accredited space and you start getting into like multiple millions, you're up against people that are professionals. And that's when I think you really need to specialize. It's not because of what your skill set and what your bandwidth is. It's all about what you're up against. So it's kind of like the analogy that I use is it's kind of like playing football, right? So if you're in high school, maybe you can play both offense and defense just to figure out what you're better at. But once you start going college ball, and then definitely when you go pro, you have to pick a side. You have to pick an offense, defense, special teams. Because if you don't, you're going to be up against somebody who does that role 100% of the time, and they're always going to beat you, right? So you've always got to put your best foot forward, in my belief. So it takes you a little bit of a while to figure out where you're going to be strongest, where's your default advantage, whether it's going to be what we call the buy side or the sell side, which is asset management or client facing.
All right. Well, that makes a lot of sense. And so when someone is kind of new to this process, new to raising capital, what's the best way for them to get started? Should they be trying to build their brand presence online? Should they be networking to find these people? What's kind of the method?
Yeah, and that is really a sort of a tough question to answer, because it's almost like trying to get somebody to explain how a Swiss watch works, right? There's so many different moving parts, and they're all vital, because if you miss one cog, the whole thing doesn't work. So it's more of a circular sort of construct when you take a look at capital raising or essentially sales. Some of the things that are really important, though, is knowing who your target audience is. So who's your avatar, as we call it? Who's your ideal client? And then be able to empathize and understand what are their pain points. Then you also need to understand who you are and what your offering is. And then at the same time, understand what everybody else is offering. So it's kind of like if you're to start building something, it's starting to use that concept in Sun Tzu, The Art of War, which is know yourself, know your competition, or know the enemy, and then know the terrain. So in business, those three translate into know your product, know your value proposition, know your why, that's you, and then know what everybody else is offering. So what else your investors can invest in, whether it's the Dow Jones, whether it's other syndications. And the third point is when you talk about the terrain are the investors themselves. What do they care about? What are the sort of pitfalls? What are their pain points? And understand those three elements very well.
That gives everyone a pretty good start of, where to look. Would you say it's more specific to a person, whether they should be focusing more on building their brand presence online, or if they should be networking, kind of whatever they're best suited for? Or do you feel like they should be trying to do both?
Yeah, and that's a really good question. So I get this quite a lot, and people say that they ask the questions like, where do I go to find accredited investors? And I think the better question is to reframe that. The question is not where do you go? The question is not, so it's not a matter of where, it's a matter of who. So you start off with who specifically are you going to be focusing as an accredited investor? And then once you understand that profile, then the next step is to take a look at where does that profile, where do they hang out? Where do they go the most? So when somebody asks me, it's like, hey, should I be on social media? It all depends. Where's your avatar? So like if your avatar is a 75-year-old baby boomer male that has multiple millions, how often do they go on social media? Are they on Facebook? And when they're on Facebook, are they open-minded enough to be listening to or looking for investment advice? Or are they just on Facebook to see what their grandkids are doing, right? And so it's all about relevance. It's all about, where does your avatar hang out? And where are they in the right mindset to think and to hear about investing strategies and ideas?
Okay, got it. And how can someone figure out who their avatar is if they're pretty new to this business?
Well, that's another great question. So it's usually what I coach people with as well. So kind of start off with taking a look at your entire contact list. So everybody you know, and not necessarily just in your LinkedIn profile. So everybody that you're surrounded with. And then as you start to take a look at that list, what I would start off with is start breaking out the people from accredited to non-accredited, who you think is potentially accredited. And then you take a look at that group and that list, and then you see, is there any kind of pattern that you see, right? So if you start to notice that you have a lot of friends that are accredited that happen to be doctors, then start drilling down a little bit further into that. Because that's kind of where you've already established some sort of relationship. Is there any particular kind of industry that you're seeing some sort of pattern? And then if you don't have any of those, where do you have access? So it's kind of like, who around you is accredited? And it's not necessarily just physical location, it's just also online. So out of that group, who of them are qualified and accredited, and who do you have access to? So is there a lot of them? And then do you have access? And if you have access, when you go and interact with them, can you develop a rapport quite quickly? So to give you an example, I had somebody who said to me, we go to black tie galas all the time, and there's tons of accredited investors in there. However, they work for the wait staff, right? So you're literally talking to accredited investors like 4 nights a week, but you're serving drinks. So if you're going to be talking about investments, chances are you don't have much credibility in that space, right? So that might not be the best place to go to try to pitch. It's a great place to get investor research or do market research to learn about their values, not a great place to pitch and look for something else. So do you have access? Is there a lot of those accredited investors? And do you have credibility in that space?
And so one thing that, when we had our one-on-one Zoom meeting, one thing you mentioned to me that really stood out, because personally, I don't think my strength is going to be in investor relations. I'm more asset management. I'm more on the finance side of things. And whereas my husband, he's definitely suited more for the investor relations. So one thing that you mentioned to me that really resonated was I just have to get good at booking the appointment for, your investor relations person to close them, whoever that person is on your team. So can you kind of expand more and just kind of explain that?
Yeah, what you'll find is you'll find in the professional sort of private equity space, there'll be some crossover. So there'll be crossovers on the capital raisers and crossovers on the asset managers, in the sense that when we go out, like if I go out and I'm raising capital and I'm talking to a group of people and they start asking incredibly technical questions, I'll have to lean on asset managers and I may have to bring them into the room. At the same time, when I'm bringing those people into the room, it's kind of like we have a secret code. It's like, if I step on your foot, you got to shut up, right? Because what I'm doing, my skill set is to watch closing signals, is to make sure that the client understands what's going on and translate. What the other person's, what asset manager's responsibility is make sure what they're saying is accurate. and then vice
Mm-hmm.
versa. So at the same time, like when I go out and I try to translate, well, this is what the asset manager is saying. I need the asset manager like, well, that's not actually,
Mm-hmm.
100% correct. You're slightly wrong. You have to be able to watch that. So we kind of lean on each other. So there will be times where we will bring in an asset manager to do like a roadshow or to talk to an investor group. But it's just that their responsibility is to focus more on accuracy and presenting the deal. My
Mm-hmm.
responsibility is to watch the audience to see and to gauge based on the objections or the questions that are asked, where's their mindset. And I watch that, and the asset manager might not be
Mm-hmm.
skilled or trained to understand what is really behind those questions. That's my skill set.
Got it. Yeah. So everyone kind of, stays in their lane for the most part, but there is going to be crossover. And obviously we have to work together as a team to get the deals across the table. You mentioned in a previous webinar that I watched, you talked about kind of a 3-step process, kind of the 3 whys. Can you go over that and explain to our audience what those 3 whys are?
Yeah, absolutely. So if you are presenting and raising capital for a real estate syndication, there are 3 sells that you need to make before you can collect a check from that prospect. And the 3 sells that you need to make is, the first one is, why real estate over all the other investment asset classes you can get into? So why real estate over stock market, over bond market, all that type of stuff, right? After you've got them to or convinced on why real estate, the second sell you've got to make is, why syndications and not single family homes, fix and flips, and apartments themselves. So individually owned apartment complexes. So why syndications over single family homes? And then the third sell that you've got to make is, out of all the other syndications that are out there, why the syndications that you're endorsing and why through you? So those are the 3.
And also, you mentioned a little bit earlier, you talked about how you are a capital raising coach. So can you give us some insight into your services and, how do you work with clients normally?
Yeah. So basically what I do is, in my entire, I guess I worked 15 years in the license world. So on top of just
Mm-hmm.
private equity and being a capital raiser for private equity, I was also a licensed stockbroker as well as a licensed life insurance advisor. So, and I worked in their respective industries. So it's just a full-on private equity firm. And then I moved on and worked into a full-on brokerage firm, and then also a full-on the largest life insurer in the nation, right, in Canada, which is Sun Life. And I learned all their different processes and the 3 different buckets of how we raise capital. But in those 3 different arenas, what I've
Mm-hmm.
been doing for my entire career is I'd always be training junior advisors.
Yeah.
So the way that we train people in licensed finance is that we typically work with a junior advisor for a year. And in that year, like a branch manager would oversee your development over a year. And they would meet with you on a regular basis, whether it's weekly or bi-weekly, and they meet for about an hour. And they just go through, what are your biggest challenges? What are your biggest challenges these couple of weeks? And what are some objections? And just basically handle the highest level stuff. Because I kind of equate that to showing up at the combine, and I just get people to run some wind sprints and throw the ball a couple of times, and let's work on the things that you're weak, and let's pass on things that are that you're really strong on, right? So are you an experienced salesperson? Then let's just switch over this way. Because when we were hiring people, we would hire people from 2 main areas. One of them would be, we would hire experienced finance people from a finance background and teach them sales. Or we would teach experienced salespeople how to sell finance, or vice versa. So it's the same thing that when I coach people is, I look for, and I use the exact same methodology of how we train licensed professionals, which is I meet with them for about a year, and I don't have an intent to have like 1,000 clients at one time. I really have a very select roster. I don't intend to have more than 10 clients at a time. And then I just make sure that I hyper focus on their success over the course of a year. And then because I pick up clients at different times of the year, and then my roster just changes over, and I just pick on pick up new clients. So it's a 1-year program. It's every other week, essentially 24 sessions is what I do it for.
Awesome. And would this be more for someone who knows that they just want to focus their strength 100% on investor relations? Or would you also recommend, whatever you're specializing in, whether it be, asset management, underwriting, that it would benefit them as well? Or what are your thoughts on that?
My primary focus would be, or my primary avatar for coaching clients is somebody that has raised a little bit of capital or tried to raise capital, have done it before, and then they just hit some roadblocks, or they want to break through a glass ceiling. That's my ideal. If people are relatively new at it, I can still teach them as well. Just my preference is somebody who's raised capital before. My secondary avatar would be somebody who may not be a capital raiser, but instead of being just an asset manager, they would be more like the CEO of an organization. So they want to know both sides. So
Mm.
maybe they're stronger on the asset management side, and that's their main focus. But at the same time, they want to understand or be able to direct the sell side, or be able to direct the capital raising team. So I can teach them how the operation works. It's kind of like hiring a director of sales to teach you what happens in the capital raising department. This is what we do.
Now, is there anything else that maybe I haven't covered or haven't asked about? Anything that, a big piece of advice that someone who is new, starting out, and just wants to get good at capital raising?
Yeah, I think that some of the top level mistakes that I see from somebody that's brand new when it comes to capital raising is typically you'll come across people that have gone to a conference, have taken on some sort of real estate conference, or how to get into syndications, that type of stuff. And I started with that too, right? And when you go to those types of conferences, it's very exciting because you learn this whole brand new thing, and they'll teach you all these numbers, and it's very, very, very technical. And it's kind of like you've got this brand new shiny object, and you're just so excited to tell anybody that will listen to it. The problem that comes into is when you translate that and you present that in a capital raising space to high net worth investors, they may not approach it with the same excitement. And when it comes to raising capital, there's a line or a term that I teach people, which is logic will get people to think and emotion will get people to act. So if you come in and you present a lot of technical data, it will get people to think, it won't get them to act. And if you want people to write you a check, you need them to act. So what I've discovered in my experience is that if you learn something incredibly technical, the value you can provide for investors is translating that into simplified terms of why they should care or why that should be important. And I did that not just for real estate syndications. I did that for all investment classes. I did that for insurance as well. These are all very technical and very complex concepts that you can present. There's tons of different, like even in the insurance world, tons of complex concepts on different types of insurance product. It's very confusing. And what's the best, and all these different structures they can use for estate planning and estate transfer. And if you can come in, and because I remember coaching this insurance team, and they would have somebody that would call in and say, hey, I'm kind of interested in insurance. And they would practically send them a telephone book of all the different insurance products that they can invest in. And they would just mail it to them. And they would just say, great, thank you for your interest in insurance. Here is a 300-page document of all the insurance products you can possibly, please let us know which one you want. And I said, that is not sales. Okay, you're trying to be an order taker. Right?
Yeah.
Really good sales is getting to know your client. So if somebody asks me, is like, hey, I heard about insurance, I'm not too sure if I should be in it, what should I do? Then we enter into what a trained insurance person does, is what we call needs analysis, which is, okay, tell me what your life is. Tell me where your problems are. And when insurance in the finance world, we call insurance risk mitigation. So instead of telling you a big phone book full of insurance products, what my responsibility to do is address and try to identify where your risks are biggest. And if I can identify where you have the biggest risk, then I expose it to you and say, hey, you know what? This is your biggest risk. Therefore, these insurance products should be the one that you're looking for. Does that make sense?
Absolutely. No, that makes a lot of sense. And, there's a lot of value, I think. If you've been in sales in the past, I think that really helps, obviously, when you're into investor relations and capital raising and just kind of understanding your investor / your clients, what their needs are, and being able to help them get to their goals and not so much trying to get to where you want them to be. It's really about understanding what they want.
Right. Because if you look at it, if you're presenting a real estate deal and your sales pitch sounds like 7% cash on cash with an 18% IRR and a 3-year hold, this is going to be the best investment product for you. Why don't you take it? And you haven't even talked to them. It's kind of like going to the doctor, and you sit down and the doctor's like, great to see you. Here's your prescription. It's an aspirin. Here's some metformin. And here's some, the metformin is great for diabetes. You can take this. Aspirin's great for pain. You can take this. And he hasn't even asked you a single word. Like, what does that feel like? Right? It's like you have diagnosed and given a prescription even before you talk to see if it's relevant or if it's important to that person. So that ends up becoming very salesy. It means that you're pushing something onto somebody. But when you go in and you just say, tell me where it hurts. Tell me what you're looking for. What are you concerned about? And it's like, well, based on some of those concerns, I think that it's relevant that this is an asset class that you might want to consider based on some of the ailments that you have.
Perfect. All right. Well, thank you for sharing with us today, Edmund. Thank you for being on the show. Where is the best place for people to find you online if they want to learn more about you and maybe learn more about your coaching services?
Sure. They can reach out to me through LinkedIn. So it's EDMUND CHIEN. It's a unique spelling. Last name in Chinese actually means money. So
Nice.
the Chinese character for money is actually my last name. So
That's awesome.
So there's a little bit of trivia there. But yeah, they can reach out to connect with me on LinkedIn and then mention that they heard me on your podcast, and then we'll take it from there.
Perfect. All right. And I'll make sure to include a link to your LinkedIn below in the show notes. Thanks everybody for tuning in. If you enjoyed today's show, please give us a 5-star review on Apple Podcasts or Spotify. Every review helps us to be able to reach more and more people that are looking to get involved in commercial real estate. Today's show was sponsored by Synergy Capital Investments. To download your free multifamily investment guide for beginners or to schedule a call to learn about our upcoming investment projects, go to thrivewithsynergy.com. That's thrivewithsynergy.com or click on the link below.